Hi guys, this is a very good comprehensive example and I want you to work through this example with me. So let's start reading through the information. CDL measures the inventory on the first in, first out basis. The normal capacity of the manufacturing plant is 100,000 units per annum. Guys, important to read in information that can either provide you with the units per annum or the units per month. And then you need to determine if they provide you with a production period, the months. This will not always be for 1 year, guys. Therefore, ensure that you read the information provided. Due to unusual significant labor strikes during the current year, only 90,000 units were manufactured during the 2015 financial reporting year. Therefore, the normal capacity is 100,000, the actual is 90,000. The closing inventory on hand has not yet been assigned a cost price and the following information is available. Now guys, this is your clue. The closing inventory has not yet been assigned a cost price, therefore most probably the requirement will indicate that you need to determine what the cost price is or what the amount is that should be transferred to cost of sales and so forth. They provide us with the raw materials of opening stock per prior year financial statements, and this will be 12.8 million rand value. Then they provide us with our purchases, which is 689,000,000, and our closing stock, which is 10% of the costs allocated to inventory for the year. Now guys, my first step will be to include my template. This is a clean set, therefore this will be my step 1. I will include my template, and my step 2, I will start by including all of the information provided. They've indicated to us that the opening balance of my raw materials will be the 12.8 million, and I will include this amount. Therefore, important, I will tick off that I have used the amount. Then they indicate to us the amount indicated for purchases represent the total purchases made during 2015 financial reporting period, excluding VAT. Great, this is correct. We will recognize the amount excluding VAT as inventory. All purchases were made on the terms that payment be deferred. Immediately, guys, you need to identify that you will have to calculate a present value for 6 months. These terms exceed the normal credit terms granted by debtors by the supplier. Time value of money is material, and an appropriate discount rate for present value calculation is 7.2% per annum, normal and post-tax, compounded monthly. Guys, therefore, this should be pre-tax. You need to know this. You should be able to calculate the pre-tax. Now, immediately, let's include this into our template. We will have to add our purchases, but this will be a calculation. Let's call this our calculation number 1. And remember, indicate to your marker where you perform your calculations. Calculation number 1. We know that our future value will be the amount of 689,000,000. Our period will be 6 months. Our discount rate is the 7.2% divided by 72% because we need a pre-tax rate, and this will be 10%. Now guys, important, if you use your period in months, ensure that the rate you use is months as well. Therefore guys, this will then be the 10% divided by 12 that you need to use. Remember, I personally use a sharp, therefore if you have an HP, ensure that you know how to use your HP. And therefore our present value will then be an amount of 65553,287, and we transfer this to our template. Now let's refer back to the information provided. They've indicated to us that our closing stock is 10% of costs allocated to inventory. Therefore, guys, this will be 10% of the present value that we've calculated. And then again, guys, you need to indicate to your marker where you include your calculations, number 2. And this will be calculation number 1, the 65553,287 times 10%. And this will be 655,329. Now, guys, immediately you can calculate the amount that shall be transferred to your WIP. And this will be your balancing figure. Now let's refer back to the information provided. Let's tick off that we've used that amount. We have calculated the present value. Now let's work through our work in progress. Opening stock is an amount of 18750,000. Immediately we include this in our template. Closing stock, 5% of cost allocated to inventory. Now, important to read, guys, the costs allocated. You need to read. If they indicate to you from opening balance as well, you need to include your opening balance. Now, let's look at the costs allocated to identify what should be included in our work in progress. First, yes, our direct labor costs. Retrenchment packages, guys. For peaceful parting of ways, no. Legal fees for labor negotiations due to unusual strike activity, no. Transport costs for raw material to manufacturing plant. Yes, guys, this should be included. Refer to paragraph 16 of your IAS standard. Then, off-premises storage of raw material during violent strike action. Storage of raw materials, guys? Yes, but due to the fact that this is of our violent strike action, no. Additional security implemented for safe transportation during the strikes, no. Variable production overheads, yes. Remember, variable will be based on your actual capacity. Variable admin overheads, no. No admin, guys, remember. Fixed production overheads, yes, but we will have to determine what should be allocated based on our normal capacity. Fixed admin overheads, the 3.4 million. No, guys. Transport of finished goods to clients, no. And sales commission, no. Okay, so let's quickly include the information into our template. They've provided us with our opening balance. We had to include our labor, our transport, our variable overheads, and now we need to calculate our fixed overheads. And let's call this our calculation number 3, reference calculation number 3. And they've provided us with a total amount of 18.5 million. And we've indicated that we need to use our normal capacity divided by 100,000 times our 90,000, and this will be an amount of 16650,000. Now, guys, important, what happens to the difference? The 18.5 million minus the 16.650. That difference shall be recognized in our cost of sales, in our profit and loss. Then they've indicated to us, guys, important, that our closing balance will be 5% of our total costs incurred. Therefore, guys, our total incurred will be this total, which is the amount transferred from raw materials as well. And this will be an amount of 157,547,958. Now, guys, don't get confused. This is the total amount. Please do not add everything and then add the total again. Therefore, our closing balance, calculation number 4, times 5%, and this will be 7,877,398. And now we are able to calculate our balancing figure, which shall be transferred to our finished goods. Then let's refer back to the information provided. Finished goods. As CDL manufactures the finished goods on order only, no finished goods are carried by CDL at any stage during manufacturing process and also not at reporting date. Therefore, guys, your opening balance will be 0 and your closing balance will be 0. Therefore, we can include that our opening balance as well as our closing balance will be 0, and the amount that shall be transferred to our cost of sales will be the 168,420,560. Now, guys, do you identify based on this? You can calculate anything regarding your inventory. If you have to disclose, for example, your closing balance in your inventory at the end of the year, this will be your raw materials closing balance, the 6.5 million, plus your WIP, 7.8 million, plus 0 for finished goods. And this will be the amount that shall be disclosed in your statement of financial position. If you need to calculate the amount that shall be transferred to your cost of sales, you can use the 168,420,560 plus this difference, guys, when we calculate our fixed overheads based on our normal capacity compared to our actual capacity, and this will then be the total that shall be recognized in your cost of sales in your profit or loss. Therefore, guys, if you use this template and you follow the steps provided, first include your template layout, then include opening closing balances. Step 3, start by completing your template. Identify what should be transferred to WIP, to finished goods, to cost of sales, and so forth. Then you should be able to answer most of your questions on inventory. The only thing that you still have to remember is the fact that inventory shall be measured at the lower of 1, your cost, and 2, your NRV. Therefore, guys, you should be able to include this calculation where required as well.